Hey everybody, it's me, Gregory Mannarino, back on this very lovely day, Friday, July 6th, 2018. You know, there's just almost too much loveliness to go around. It's really the truth. Let's start off with how about this? On Saturday, last Saturday, I did a video for you, which I'm going to start doing every Saturday, meaning tomorrow. I'm going to do one with a look ahead. Well, last Saturday I said this week was going to end higher than the market opened on Monday, and that's exactly what did happen, and I hope you all capitalized on that. I did. I had almost a stupidly phenomenal week in this market trading. It's not that hard, especially with all of the free tools available for you on my website, traderschoice.net. Please take advantage of that, especially that gauge. A lot of you seem to be loving it. There's a link in the description of this video. Now, tomorrow, I will do, again, a video talking about, I already have an idea in my head, but I want to put a few things together so we can capitalize on this next week. You're not going to lose under my watch, I promise you that. So, again, stocks did finish higher today. But it's about the bond market, and I want to talk a little bit more about it. I know it's all I talk about these days, but although it's being ignored, actually it's not being ignored. Let me put a new perspective on that for you. If you were to turn on like CNBC or Bloomberg or any of these financial channels, they're going to tell you that the market continues to shrug off whatever's thrown in its path. And that seems to be true. But it's not really a shrug off. This is the real perspective on it. There's nowhere else to go. And that's the environment that is being maintained. You cannot be holding a government bond here. You could certainly hold a corporate bond. A couple of people I know are into that. But again, with this kind of environment, there's nowhere to go to make big money other than into the stock market, especially if you're trading derivatives like I do. It's frankly ridiculous. But so that's the environment. It's not a shrug-off environment. There's simply nowhere else to go. You know, cryptocurrencies, whatever. Every time I open my mouth and say a negative word about cryptocurrencies, I get attacked. Well, I guess I'm going to get attacked here. Cryptocurrencies have been dead money for quite a while now. I'm not saying it's going to remain that. You all know that I believe in these assets. I own them myself. I've traded them. I own them. Period. Okay, so you cryptomaniacs, say what you want to say about me, but the fact is, it's been dead money for a while. Unlike the stock market, which is going in one direction, because that's the environment we're in. Period. So we have actually today it dropped. The spread between the 10 and the 30 dropped under 11 basis points, 10.4 at one point. I think it's about 11 now. I want to clarify something right here and right now so this doesn't get twisted or misunderstood. We are going to get an inversion. It's pretty much common knowledge now. Even the Confederacy of Dunces is starting to talk about it, and they're going to talk a lot more once we hit single digits, which is not too far off. Just because we get that inversion does not mean the market is going to correct to fair value that day. Again, using history as a guide. 2008, we had the inversion, stocks continued higher, and then whammo. .com, bubble, same thing. Yield curve inverted, stocks climbed, whammo. I believe we're going to see the same thing here. Why? Because there's nowhere else to go, and people don't know any better. That's the truth. So you're gonna see that lag time here. So if any of you out here happen to be around and you get some information that's not true, Greg Mannarino did not say that when the yield curve inverts, the market's going to correct that day. Not going to happen. I don't believe it will happen. I believe we will get a lag time, could be weeks, could be a few months, don't know. We'll reevaluate at that time. And I can promise you this too. They are going to make sure the dollar stays weak. If they don't, in this environment, with the yield curve flattening out and on the cusp of inverting, we're in a lot of trouble. Let me talk about more trouble for you. The Federal Reserve has honestly got this completely wrong. They've been talking about how they're going to raise rates. We've been hearing how we're in a rising rate environment. Meanwhile, the polar opposite has been happening because the Fed has lost control. They obviously, that's their job, to maintain rates at a certain rate. How do they do that? By getting into the market, by buying and selling debt. You all know that. Well, there's a problem here, obviously. And the yield curve is screaming at us. Very few people are listening to it. I know you are. You know how much heat I've been taking over the years about this? Every time I opened my mouth, like say last year, and I was talking about the yield curve inverting, people laughed. I mean, oh, there is no way it's going down below 20. No way. It's not going to happen. Greg, I'll bet you some guy bet me $1 million at one point that $1 million that the spread between the 10 and the 30 would not drop below 20 basis points. I wish I took that bet because I'd be a lot richer right now. So, I don't hear these people anymore. It's kind of funny. All those creatures out there that think they know the markets better than I do. Well, okay, I'm sure a lot of you do, but okay, prove it to me, and then we'll have a common frame of reference here. But I don't think there's a guy out here, seriously. Maybe there is, I don't know of one, who has called the market more accurately than I have since the election of Donald Trump, or the bond market. Speaking of that, and the Federal Reserve in trouble, which I wanted to address here. The Fed, again, has got this wrong. No surprise, I've been explaining to all of you for a very long time that they were going to get it wrong again. They never get anything right, ever. Look at their history and point to one time that the Federal Reserve has gotten it right. Well, I mean, that can be debated too. I understand what you're thinking right now. If their idea is to fleece the people, well, then, of course, they're getting it absolutely right. And that is the truth. But, if you want to stick to their narrative, oh, they're on our side, they're making sure our economy is doing the right thing, well, obviously, that's not true. I could see the other side of the coin. But here's the deal. Now, all of you know that have followed my work, and this is the truth as well. I'm not tooting my horn. I am just stating a fact. There is nobody out here, I don't care where you want to look, mainstream channels or alternative media, who has called the Federal Reserve better than I have. I have been wrong one time in all of the years that the Federal Reserve is saying what they're going to do with regard to raising rates. Well, one time. I think that record is phenomenal. I don't know anybody else who's that good. Here's the issue. The Federal Reserve keeps talking about how they're going to continue to hike. Well, if they do that, they're going to be hiking into a yield curve that's flattening and inverting. So if the Fed would, even one more hike will be enough to invert the curve. The Fed does not want this. They've already lost control of the markets. They cannot normalize their balance sheet fast enough. And there's a lot of rumors out here. I don't know if any of you are hearing this, that the Fed is not allowing anyone to look at their balance sheet anymore. I think it should be on their website, their balance sheet. So I have to check this for myself. But if you've heard this, let me know. The Fed cannot normalize rates fast enough to affect the long end of the curve to prevent an inversion. This is something I've been saying for I don't know how long. Got ignored. Okay, well, people are going to stop paying attention real soon. Let me promise you that. I can also promise you that until all this plays out, the market will continue higher. Now, as for next week, again, I'll address this tomorrow. I got to put all this together. Anyway, I know this is getting kind of long and it's getting kind of wordy, but I just wanted to cover these things for you. I think it's important, all of this stuff here. And the main thing is, for us to capitalize on it. I mean, that's what this is. I mean, why am I out here opening my big mouth? Because I don't want us to be fleeced. We're not going to be fleeced. Everyone else is going to get fleeced, but you and me, oh, no. We're not going to be fleeced. Just one more thing before I let you go. So there's a lot of people out here who believe, just like they did in 2008, just like they did in the dot-com bubble and every single other market extreme, this time is different. Oh, the market's never going down. That's what everyone believes now. Well, they're all wrong, because the market runs in cycles, okay? We are at the top. I'm not calling a market top here, okay? But I'm telling you, we're at the top of this cycle here. And my prediction right here and right now is we will invert, yield curve will invert. Within a relatively short time after that, the stock market will correct to a fair value. And it will be off the Richter scale in magnitude. That's the truth. And people are not going to know what to do. It's very sad what's going to happen to a lot of people here. All right, look, with that said, it's Friday, people. You know what I'm going to say. Love each other. Care for each other. And be charitable. So important. And I will see you tomorrow. And we're going to talk about what we can expect next week. And we are going to capitalize on that. I promise you. See you.